What's going on YouTube? This is Dave's Daily Trades, where I post daily AMC technical analysis, price predictions, and of course, bring you the latest and greatest scoop on AMC. Before I start this video, I'd be greatly appreciated if you guys could hit that subscribe button and smash the like button. All right, jumping into today's technical analysis on the 1-minute chart. We did start off the day with a green push up to that resistance level of $60, got rejected one time, and then traded up to a high of $64.70, traded sideways for a little bit where the shorts decided to play their little game and drive the price down. Of course, there was some pretty nasty selling here, which of course is all artificial. No one's selling. The apes are holding. We're a very strong community, guys. I'm not worried about that. This just happens. Of course, you guys who have been with me since early January know hedge funds, market makers, they have the power to really drive down the price, which of course is what we saw today. Don't be ashamed, because this is what we've seen the past couple of trading days, where we have that big morning push, trade sideways, fall down a little bit, and then have a good amount of consolidation towards the end of the trading day. And literally exactly what happened here today. Of course, we did hit that high of 64.70, which was higher than previous day's high, which was around $60. But really the biggest thing I want to point out is this consolidation over here. We can confirm that, of course, by looking at the MACD, which is one of my favorite indicators, by the way, for those who are new to this channel. This is really wonderful. I love to see this. We are comfortable at and around that $60 range. I love to see it. And of course, I'll even point out this consolidation right here for just about an hour, where we were consolidating right around 63.50 for a majority. This was probably about an hour, and this was probably just about an hour and a half, call it 2 hours of the trading day. So really my expectations for tomorrow is we're going to see what we've been seeing, where we do test this $60 resistance right in the morning, and then push up somewhere around the, I would say, high 60s, and maybe even test that $70 range. So we'll definitely keep an eye on that. RSI looking pretty good for the day. Of course, during these sell-offs here, we did get to the oversold range, which is totally okay. But for the majority of the day, trading right above that $70 and $30 level very perfectly. All right, so we'll jump over to the 1 hour candlesticks, take a look at what this is showing. And of course, 1 hour has really been one of my favorites to pay attention to. Just because I feel like 1 minute, it's really almost too much because there's so much data going on. But with 1 hour, it gives you time to relax, really pick out those key support and resistance line, and really have a good technical understanding of what's going on. So of course, yes, we did trade above the resistance line for literally, call it 2 hours. We got shorted, came back down, and really at the verge of this. So I think right now AMC is really just trying to pick a direction. Are we going to shoot past and retest this high of 72.62, which I think is going to happen? Or are we going to consolidate here a little bit more, maybe touch $50 one more time before we skyrocket off? Which, of course, who knows what's going to happen? No one knows. But I would say best case scenario, tomorrow we passed this level and turn this resistance into a support, which I think is very possible. So we'd see a little morning gap up, test down on that $60 level, and then shoot back up into the high 70s. Of course, looking at the MACD, this looks fine, guys. Yeah, of course, it looks like we're about to have a crossover, but that's totally fine over here. And a lot of people look for those MACD crossovers for either bullish or bearish patterns. But I want to point you guys over here where we did have that sign of, oh boy, we are going down. MACD is going to cross over, and we're going to come back down to earth over here at maybe $10, $12. But of course, we had this consolidation on the MACD where, yes, it did cross over, but immediately crossed back over to the upside, which led us to that massive, massive move. So, of course, really the big thing that I've been keeping an eye on is the options data that's coming across. As you guys know, there is so many options expiring this Friday. I believe it was like half a million, something around that. And of course, we're going to take a look at Stonk O Tracker, so stay tuned for that. But really, this is totally fine. RSI really looking nice right now. We are back down to that 57-ish area, which is perfect. Really my go-to with understanding and reading the RSI is if we are above 50, that's extremely bullish. Anything below 50 and 30 is a little bit on the bearish side. Obviously, of course, below 30, that's oversold and you need to hop in. Anyways, let's just take a quick look at the 1 day. Really just want to show you guys that we are getting those higher lows, which is really good. Even though we're not moonshotting into the stratosphere here, we're still making moves, and this totally looks really good. So, of course, yes, we did get rejected. We did not close over that $60 range. Totally fine. RSI, MACD, still looking super, super healthy. I love to see this. And as you guys can see here, when we were at the 70 mark, which really looking exactly like that, we did have that few red days, and I wouldn't even call it red days. That's more like consolidation at that point, before we started stair-stepping our way up to the high of $72, which I think is going to happen, and especially with all of the options that are expiring at the end of this week. All right, we'll jump into the real juicy goods of today. So this is Stonk O Tracker, of course, going with AMC here. Guys, I'll link this in the description, but definitely use this because this was made for the apes, and this is definitely for the apes. So support the community by supporting this page. Absolutely share this around and get the word out. Anyways, 484,497, call it 500,000 calls expiring in the money on June 18th. And of course, we are so close to that $60 range, and that would bump us up 31,000, call it 32,000, close enough, of calls expiring in the money. So that would push us to literally 500,000 shares expiring in the money by June 18th if we stay at our current price. That's not even factoring in if we do have that massive gamma squeeze where even more options become in the money. So super, super interesting, and I am super bullish for this week just because of the amount of calls that are expiring. Jumping down here to borrowed shares, I really take this data with a grain of salt because, of course, you guys see how the hell are they getting 3.2 million shares here? They're literally pulling shares out of their ass right now. That's just a given. The ETFs, of course, they've been hammering the ETFs, which is, of course, a way to drive down AMC. And, of course, now that AMC and GME, their market cap has gone up so much, their value in these ETFs is much greater than they were months and months ago. So definitely keeping that in the back of your head while we're going through this. The fee, of course, has gone down. I remember, call it a month, 2 months ago, we were seeing fees of 24%. Now we're down to 2.2, but guys, this is totally fine. And this also could be because some of the larger brokerages are actually not allowing their customers to take short positions in AMC and GME. So, of course, basic supply and demand, guys. If so many people are not taking shorts anymore, they're going to lower the fee because there's a less of a demand to take shorts. Totally fine. Coming down here, this really just shows all of the options, calls and puts that are expiring for June 18th. Definitely a lot here. So really the one thing I want to let you guys know is why I think there's going to be a gamma squeeze is because of the term delta hedging. So, of course, hedge funds and market makers, they have to hedge their positions, hence hedge funds. So what happens is, obviously, a lot of these companies are on the short side, so they have puts. So when you have to delta hedge, you're losing money on your puts. So you're saying, okay, I'm going to lose, let's say, $1 million here. So I have to buy calls on the opposite side or even buy stocks to hedge my losses on that opposite side. So if I'm expected to lose $1 million, I got to do some really good math, figure out what my risk is, buy those calls, buy those shares, which essentially is going to drive up the price even more. And keep in mind, with 500,000 calls expiring in the money on June 18th, most of this was at the $40 strike price. Guys, we're at, just call it $60 now, $59.04. So that's a massive, massive amount of delta hedging that they have to do to make sure that they're going to be able to stay afloat and fight another day in this battle. So I definitely super bullish for this week. I really think tomorrow, Wednesday, is going to be the biggest day because really what we've seen is Wednesday, actually going back 2 weeks ago when we actually had that first run up to $72, it was on Wednesday when that happened. And of course, a lot of that movement was because of the delta hedging. They were getting ahead of that Friday expiration, so they go all in on these call options to drive the price up. And voila, there we go. All-time high of AMC. And of course, I'll just jump back to the chart here. Guys, this sell-off right here, that was obviously manipulated. We all know that. But the biggest reason was, guys, they want to get calls that were cheap. You drive down the price, you bring down implied volatility, you can get call options that are ridiculously cheap. $2, $3 a contract, which is relatively cheap given that the implied volatility on AMC is absolutely through the roof. So you short the stock, you bring down implied volatility, you load up in preparation of Friday's ginormous expiration, and there you go. We're going to have another massive run-up. And I believe the preparation is going to come on Wednesday. And then, of course, we're going to have that run-up. People are going to take profits. We're going to go down. And then, of course, this battle is going to keep on going and going and going. But they absolutely need to delta hedge on these option contracts, especially given the amount of contracts that are expiring in the money. So, should be super, super interesting. And then really, guys, this is just the icing on top of the cake today. DTC 2021-005 was approved. So just want to take a quick second and go through this. Of course, I'm not going to go through the whole, I think it was like 183 pages, maybe 200 pages to go through all of that, because I think there's so much fluff and bullshit, as I'm going to say it, that's in that article. So anyways, what would this mean, and what exactly is 005 going to do? So this means securities can't be borrowed more than once, which of course has been going on for so many months, and actually even years before even AMC and GME was a thing. Some securities won't be able to be used as collateral. So of course what they're doing is saying, oh yeah, no, I have, let's call it $10 million, but that $10 million is tied up in other stocks or assets or some type of collateral. So they're using that as collateral to actually take short positions. Terrible. It's absolutely terrible. So of course, that's why that's not going to happen anymore. Short/naked option selling or buying won't be possible. Hedge funds will need to have the shares when buying puts or selling calls. So of course, naked short selling is literally when you take a short position, you sell into the market when you don't have that share in the first place. You can't be doing that. So that's literally like having this house, I'm going to sell it to you, collect your $300,000, run away with that money and never give you a house. That's exactly what's happening, and that's what 005 is going to protect. So, of course, down to the juicy part. I'm just going to read this for you folks here. So, this ability of market makers such as Citadel or citadel securities, as we love to call them, to generate and lend, and hedge funds to borrow and sell non-existent shares, and the suspected resulting huge number of fake shares in circulation, underpins one of the key tenets of the MOAS theory. The hedge funds would be crippled if they were forced out of their short positions, because to do so would require them to buy back all of these fake shares. So of course, guys, back to the naked short selling. You put a short position into the market that you don't even have. That creates this, we'll call it a phantom share here, where you have these fake shares running around the market. And of course, that's going to dilute the price. Float of AMC is just over 500,000, but there's probably millions, if not even billions, of these synthetic shares going around. And if this MOAS happens, you have to call back all your shares. You have to buy them all back and cover. Guys, they're going to be covering billions of shares of these fake shares that they created. And honestly, the craziest thing, they don't even know how many synthetic phantom share bullshit that they created, because it's all in their algorithms and in their systems. Guys, they have computers that are literally making these shares, and they don't even know about it. Honestly, I think even when this is said and done and completely over with, we'll never know the true number of fake shares that are out there on the market. And here's the best part. And if no one is willing to sell them cheaply, this buying pressure would force the GME shares and AMC shares price to rapidly rise to insane highs, indirectly causing a cascade collapse of exposed hedge funds and possibly even other DTC members or beyond. Of course, I have posted videos about the DTCC and how they have, I don't even know the exact number of members in there, but of course, they're all tied to this organization. When one defaults, someone else is going to have to pick up that bag. And it's going to be a messy bag to pick up. All right, guys, with that said, super bullish on AMC for today, tomorrow, next week, next month, and next year. But let's be real. We're holding to the end. That's all that matters. All right, guys, if you like this video, definitely hit that like button and hit that subscribe button as well. Tune in for the next video, and I'll catch you guys later.